Hi, everybody. This is Dan Sheridan. It's about 12:34 Eastern. Easy for you to say, Eastern, on Black Friday. And here we are. Market's ready to close soon, but it's 12:34 Eastern. It's been a wild day. SPX is down 85. It was down about 107 points. And the big story is VIX, which is jumped 8-9 points today, 26.63 up 8. It was up 9. So why did this all happen? Well, a couple things. Number one, they talk about this variant, whatever. But I think the bigger thing was whether there was a variant or not a variant. It could have been a catalyst, but the market's been up, if anybody hasn't noticed, right? And I think it's healthy to, after it goes up a while, to drop off a bit. I mean, today's a big move. SPX was down 2% a good part of the day. Now it's down 1.76%. It's a big move. I have a 200-day moving average here. I have a 50-day moving average here, a simple moving average. And then I have this, the short-term one, like a 9-day exponential moving average. You can see it's kind of come down there a bit. We still got a ways to go to the 50. But when I look at today, if I'm looking at a new trade today, which I normally wouldn't, I don't usually put stuff on Friday, but with the vol jacked up today, if I was going to put a trade on today, what would I put on? The vol up like this, but they're still, I mean, everybody thinks, okay, things are they're gonna rally Monday, and they might, just because a lot of forces bullish in December. But if I did do a trade, what do I think of? First of all, there's two things I think about. When you have volatility come up like this, but there's still, this is quite a bit of turbulence. So if I'm going to put something on, first of all, I put a short Vega trade at, like a credit spread or an iron condor, which is what I'm going to do, or a butterfly, so short Vega. But as always, when you get a lot of turbulence, what do you want? You want a little more duration. So just the trade I'm looking at today, if you go in here. Okay, so I'm looking at out to January 21. So I'm going out January 21. The weeklies are 56 days out. So I'm going 56 days out to the what are they there again? They're the January 21 weeklies. All right, so I'm getting myself plenty of duration. So why does that matter, Dan? It matters because the more duration you get, the more protection against the price move. But we like this high volatility of 26, 27 area. Not that I can't go higher, but so I'm putting an iron condor on around. I'm looking at 46.20, and this is the SPX. And I'm looking at Thinkorswim, TD Ameritrade. So this green line will be the expiration graph in 56 days, and the purple line is today's graph. Now you can put on anything, any brokerage firm. I just happen to be using this today. But so let's look at this trade. And this is where it's trading at about. So I'm going out and I'm selling the 49.70 call. So that gives me 350 points protection. So on a day, what are the pluses of doing an iron condor when the volatilities, when VIX is up a lot like today? And it's, the credit is about 210. So the credit doesn't change that much, a little bit. But the big thing is you get a lot more room to your wings. So for 46.20, my short call is 350 points out of the money. And the short put is 42.40. It's 380, almost 400 points. But we get about 380 points on the downside, 350 on the upside. I call this an equidistant. Iron Condor. Good. Say why? It's kind of balanced, equidistant. What do you mean? We're about 350 on the up, 380 on the down. Oh, I get it. All right. And that's what I'm. So if I'm selling the 490, 4970 calls, I'm buying the 4980s for my hedge or protection. So it's an iron condor is an out of the money call credit spread. And my longs are going to be 4230 by out of the money puts, 10 points away. So these are 10 wide credit spreads. If I do this for a $2.10 credit, and I'm doing 10 wide credit spreads, my risk for every one I do is going to be 1,000 minus 210 for $210. That'd be $790. So if you look at the potential yield at expiration, we wouldn't hang in that long. It'd be about $210 divided by 790. That's going to be what? 20 to 25% at expiration. And again, I looked at, when I put some of these trades in, I'll look to stay in maybe 20 to 30% of the duration at the most. So anyways, something I'm looking at today. Check out our website. We have some new on-demand videos available for the public. Have a wonderful Black Friday, if that's possible, with the shopping. And I will see you next time. Thank you.